The politicians damage bull markets. They've never run businesses. They have no idea what they're doing. They're just throwing this stuff out there to raise money. I don't want to be a cynic, but it's a fact. They have no idea. And so they put these crazy policies in place. The more you keep chipping away with stupid policy, the more damage you do long term to your economy. Now, this 15% minimum tax does not help equities. It doesn't. It's just going to have companies contort and try and figure out how to get around it. Bottom line. The IRS, 88,000 more agents, that's just going to hassle small businesses in America. Not a good thing. So bad policy. The whole point is when you have a situation where Washington can move policy, more than 50% of it is bad policy. When you have total gridlock, they can't do anything. They can't damage anything. Listen, it's important to have government for many different services, but not for making economic policy. They're really bad at it. So that's why I point out, once you shut down the policy machine, markets we have right now, a 40-year new high in inflation. But at the same time, if you could figure out the printing presses were going to stop, you would be forecasting a new leg up. And here's my thinking on this. There's two bills right now in front of Congress. And so one is a watered down version of Build Back Better. They're calling it anti-inflation, but everybody knows is a joke. This is very inflationary, but it's a spend over 10 years. So that's one attribute of more printing, which would maintain an inflationary stance and, of course, keep the Fed raising rates, which is not good for equities. And then there's this interesting situation in the chip bill where we're going to spend billions of dollars. It's, again, free money from a helicopter going into the Midwest to try and catch up with what's happened in our lack of ability to manufacture semiconductors. Now, cut it to what it is. It means that management, the Intels of the world, the AMDs, they made a mistake. They moved all their production offshore decades ago. Took the U.S. down from 32% of manufacturing down to less than 10. Now they got to bring it home. We're going to print money to make that happen. That also is inflationary. I think in terms of allocation and distribution of your own portfolio, I don't care who you are, there is a place for fixed income. Now, we run a pretty big fixed income desk here. We look at all credits, right from treasuries and govies all the way over to factoring for retailers. And the challenge we're having right now in pricing in risk is in a bond situation, if you get it wrong, you have to wait a decade to get your principal back. That's not a good outcome. And you could go shorter duration. But what's bothering me as a bond guy, that's how I started my career, is what BlackRock is doing right now. Instead of buying fixed income, and remember, they're trying to put to work billions every week, they're buying U.S. apartment buildings instead. They're reallocating away from an actual bond, a covenanted instrument, and they're buying fixed income based on distributions of rent.
Bitcoin's up 40% from there. I'm hoping and praying they write another article, okay, another mean-spirited article, so that we can get Bitcoin up through 30,000 again. But my point is, if you're going to do this for a living, you have to be prepared for this level of volatility. My point is I'm going to stay the course. I'm going to continue to educate clients. I'm going to continue to explain to people that if you can delayer a society and you can take out middlemen of society and we can go peer-to-peer with our transactions and we can create a currency or a ledger, let's just call that's what a currency should be, that's not corruptible by policymakers or politicians. If we can do that, then market forces, being what they are, will gravitate to that because it'll be cheaper and it'll be more stable than the system that we're currently running. So again, maybe it won't fully adopt, guys, and maybe it becomes a store of value. But if it does fully adopt, like some of these guys think, I mean, this is a monumental time to be involved with this stuff. And as that cracked and the tech bubble evaporated or was punctured, I have a generation of my friends, okay, contemporaries of mine, that said they swore off technology, they swore off Amazon, swore off Google. I'll never touch any of that again. And yet they missed a generation, 22 years of the best asset class in American history. So I think we're there again, and I don't want a generation of investors who have been burnt by Bitcoin going from 69 to 20 or 17,000, or the Celsius situation or Voyager or the Terra Luna situation, to then swear off the entire asset class. I have to get on the phone with the investors and calm down the investors because we've got imbeciles in these wirehouses, not mentioning the name of the imbecilic wirehouse, but that are doing this. What are you guys doing? Okay, I mean, that's not the way you invest. I thought you guys were all disciples of Warren Buffett. You're supposed to buy the shit and sit on it, And Raul, you know this. Scott probably knows this. The best performing accounts at Charles Schwab are the dead people.
I know.
Dead people. Okay, because they're dead. They're not looking at the account. And when you're dead, you don't have that much emotion, I don't think, when you're looking at your statement. If you've got 73 million Americans own cryptocurrency at this point, you have this now decentralized lobbying organization. So these politicians are marketers, and these elections are marketing competitions. So if I'm running for office, I turn to my political consultant and say, hey, what's my position on Bitcoin? Because most of these people don't give a shit. They're politically expedient. And the political consultant says, well, you better be for it because your opponent's going to be for it. And you can't be standing at the podium and saying, well, he's for it. There's 73 million people that are behind him and I'm not for it. You see, and that's what's happening. And that's why these bipartisan bills are starting to come together. And that's why guys like Gary Gensler have said, Bitcoin's a commodity. These other ones are securities, but Bitcoin and Ethereum are commodities. Bitcoin helps the unbanked. The president of El Salvador believes that his people will save $400 million. When an expat from the United States sends money back to their mom or dad, usually they're unbanked. They walk into Western Union with cash. Western Union takes 7 to 10% of their money. Mike Novogratz made $1 billion off it, and she doesn't like rich people making money. And so that upsets her. Even though Amazon has lowered costs to poor people, Walmart has lowered costs to poor people, the people that created these businesses are not supposed to make any money, according to Elizabeth Warren. Okay, this is the absolute insanity and the stupidity of this type of thinking, okay? We should be creating an aspirational society with uncapped outcomes.
If you get a U.S. stablecoin policy in place, it makes it the default payment system of the earth. Not the Swiss franc, not the euro, not the British pound, not the Chinese yuan, the U.S. dollar. So this is coming back to the House on the floor in September, and it may be the first piece of legislation that provides the launch ramp for more crypto policy. Now, there's a war going on between the SEC and the other regulators, a turf war on crypto, but you can't deny crypto is here to stay. In fact, I believe in the next 10 years, it'll be the 12th sector, the S&P. And I'm trying to make bets all through the continuum of projects. I own everything. I have 32 positions. I don't know which ones are going to work. I don't need them all to work. I just need a few. Huge position in Ethereum, huge in Bitcoin, Solana, Polygon, Helium, Pollen, the new one I just took on. There's all kinds of projects. And the thinking for me is this. You go teach a class of MIT graduates in engineering right now. I do guest lecturing there. 1/3 of the class are entrepreneurial. Where do they want to go? They have no interest in working in any of the 11 sectors of the economy. They want to work on the blockchain. They want to be in crypto. You can't pour that much intellectual capital into something and not have great outcomes one day. It's like being at the beginning of the internet. And I'm talking about the smartest, brightest men and women from around the world saying, screw everything else. I want to work on crypto. I can report to you faithfully that they own no crypto, zero. And so for all the excitement, and the reason they don't is they don't have any infrastructure to be compliant. It's not just that they're not allowed to because it's not regulated. They have no infrastructure to market. And so that their compliance departments can monitor whether they're over levered, or they have whatever their mandates are. Let's say you're maxed out at a name at 5%. They don't have any infrastructure to make that work like a stock or a bond. They're working on that. So is FTX. So is Binance. All the major trading platforms are trying to provide that infrastructure. But as it stands right now, last year, up to just before the correction, they were using public Bitcoin miners in the U.S. as a proxy to own Bitcoin because it traded in direct correlation, and I know that because I indexed for them. And so I'll never forget this. This is crazy. We were indexing. Other indexes are doing the same thing. The indexing business is about making 3 basis points. If you're an oil-rich country and you're bringing in $500 million US a day, the only place you can put it is the S&P 500. You don't move the market with that. And so at the end of the day, they'd say, okay, index to S&P, X oil, X airlines, because most of those countries own their own airlines. So, and they don't want any oil because they got plenty of oil. So when it came to Bitcoin, they said, look, we want 50 basis points. Come up with an indice that is a proxy to the risk on Bitcoin.